Okay, sorry about that, guys. We need to sort this thing. All right, so we're gonna start right away. My name is Conrad Okogu, and we're continuing the series on the risk management 102. So if you can hear me clearly, just say good, and if you can also see me, and most importantly, you should be able to see my screen. Hold on. Let me ensure that you can see my chart. Okay. All right. So, okay, please let me know if you can see my chart, the presentation, what I'm showing. It's not a chart; it's a slide presentation. So you should be able to see risk management 102 chart, 102 slide. Okay, so let's get started. All right, good evening, everyone. Again, and this is Conrad, and this time around we'll be looking at the stop loss and how it affects you as a trader, as a risk manager. We'll be looking at types of stop loss, technical stop loss, and quantitative stop loss, and how to set them. So we'll be doing some practicals on that. We'll be looking at reward risk ratio. What is reward risk ratio, and how does this help me to optimize my returns in respect to the risk I'm taking? Then we want to look at the success rate. What is success rate, and why is it very important? Why is it important to us as a trader? And finally, we would we'll look at how to turn a bad strategy into a good strategy. I know this is daring, when you say you want to turn a bad strategy into a good strategy. So let's see, how do we do that? We're going to go into it shortly. Okay, so I welcome all of you again to the webinar, Risk Management 102. Speaking to you is Conrad Okongu, Head of Education Program for FXTM, and I would look forward to your questions. Because risk management is something that is relatively new, not in terms of application, but the body of knowledge is not so popular, it's not so available. So that's why some of the concepts might be something that is essentially new to you. So I expect your questions. So let's jump into it. So stop loss. Stop loss is an instruction to close your trade at a predefined loss. So when you are trading and then you put a stop loss, you are instructing the system to close you out when there's a loss at an amount that you have predetermined. Then it's very essential in risk management. It's one method we use in controlling risk. So when you don't have a stop loss, automatically you have put your loss in infinity. Then stop loss is set below the current price in a buy trade. So when you're placing a buy, you put stop loss below the current price, and stop loss is set above the current price in a sell trade. So it's pretty simple. So look at this chart, look at this diagram. I'm going to place a buy trade because the trend, the market is going up. So I'll put my stop loss right at the current price before the price starts to rise. Okay, so I'll try and fix my audio. Let me see where that could be coming from. Okay, please let me check now if the audio is fine, then let me know so I can go ahead. It's fine from my own end. Okay, so we said that when you're buying, you put stop loss below the current price. So let's say current price is 1.25555, and that's where your entry would be. You want to enter the market at 1.25555. You would set your stop loss to something, a price lower than that. That is, you put your stop loss, because take profit is going to go above that price, so your stop loss is going to be below that price. So something like 1.244444. Now these are just arbitrary figures, okay? So I'm not making any recommendation yet. I'm just saying when you place a buy entry, that the point where you enter the buy, below it is going to be a stop loss. I guess this is not new to a lot of you, but just follow me. I'm trying to build up something here. And then in a sell trade, when the price is going downward, you enter a sell, say at a price of 0.78888. Your take profit is below that price, and then your stop loss will be above that price. So your stop loss is going to be 0.79999. All right. So in summary, what we're saying is when you're buying, stop loss goes below the entry price. When you're selling, stop loss goes above the entry price. Is that okay? All right. Let's leave this place, because I know that a lot of you have been using stop loss, so I'm just trying to take you through it so you have a comprehensive information. Now, what are the types of stop loss that we have? We have a technical stop loss. Now, technical stop loss is when you're using technical analysis based logic. The logic makes sense technically. So some traders use top and bottoms. That top and bottom is like resistance and support. I'm going to show you a second. Just hold on. So let's say you let me check this out. Okay. Uh, so if you can you see my chart? I'm displaying a chart right now. Let me know if you can see the chart. I'm displaying an MT4 chart. Or can you see my MT4 chart? I'm trying to make sure that everybody is carried along. Okay, good. So let's say I want to place a, all right, good. So let's say I want to use a technical stop loss that is top and bottom. So for example, let's say let's look for a buy first. Oh, awesome. So let's say I'm placing a buy on this chart at this current price. Then I want to use the nearest bottom. The nearest bottom is like a support. So this is my entry. My stop loss will be at this bottom. So my stop loss will be here. This is it. So this is using the nearest bottom to where you entered the market. Okay, that's one way. Now for those for buying, for selling, this for buying. For selling now, let's say I want to place a sell. USD CHF is tumbling down. I'm trying to sell. I'm selling at the entry price, of course. My stop loss based on top and bottom will be at the top, the nearest top that I can find on the chart. The nearest top that I can find on the chart. That's how to use top and bottom. All right. Let's say one more example. Let me look for. Okay. Let's say this is a sell. Probably I want to sell. I place a sell entry here. My stop loss could be this top, or it could be this top. Those are the nearest stops. Is that okay? So that's one way to choose your stop loss. All right. So I'm back to my slide now. All right. The next type of technical stop loss is to use parabolic SAR. All right. So parabolic SAR is an indicator, and you can get it from going to the indicators list, and you go down to trend, and then from trend you go to parabolic SAR. Okay, so parabolic SAR is like this. So let me give you a little education on parabolic SAR. Parabolic SAR would show dot 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 at the top if the trend is going down. It will show dot 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 at the top if the trend is going down. So like you have a situation like this, parabolic SAR is showing dot 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 at the top because the market is going down. Is that okay? So if you want to place and then for the uptrend, parabolic SAR, let's look for an uptrend. Okay, now look at this now. Parabolic SAR will show the dot 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 beneath the candles if the market is going up. So that's why you have, in the case of USD card, as the candle, the prices were going up, parabolic SAR started showing below. So when parabolic SAR is showing below, it symbolizes that the trend is going up, and when parabolic SAR is showing above, it symbolizes a downward trend. Is that okay? Now, but we're talking about stop loss. So how do we use parabolic SAR stop loss? It's simple. When you place a trade, like now, let's say I buy at this entry price, my stop loss would be the dot directly below that candle. Every candle has a dot. Every candle has a parabolic dot. So when I enter a buy, the dot beneath my candle, directly beneath my candle, this dot now, let me see if I can zoom in. This dot now is my stop loss. So I'm going to put my stop loss somewhere here. That's what it means. All right, that's for a buy. Okay, so parabolic SAR will keep going up if the trend keeps going up. If you want to change your stop loss, that's another discussion, but that's not what we're talking about. We're just looking at different ways traders set stop loss. Now look at another one. I'm placing a sell because USD JPY in this case is going down. So I'm placing a sell at the current price. Then the dot is far above there. The dot of this candle, every candle has got its own dot. This black candle, this is dot above here. That point or that level will be the stop loss for that trade that I'm taking. So that's how parabolic SAR is. It sounds interesting because parabolic SAR would help you to follow do a trailing. You know, when you are doing when you want to do a manual trailing. So as the trend is going down, you could each dot the next dot will be lower than the previous, so you can be shifting your stop loss if you want to, you know. But that's another discussion for another time. Another way traders set their stop loss is to use what they call fractal, one of Bill Williams' tools. Fractal is gotten from indicators list, Bill Williams, and then you go to look for fractal. Okay, so that's fractal now. That's how it looks like. Interesting pyramid-like objects, cone-like objects. So the fractal is either pointing above or pointing below. So you see, pointing above, pointing below, pointing above, pointing below, in a way as if it's trying to say this is the top, this is the bottom, this is the top, this is the bottom. So every time the fractal shows up, it's trying to tell you this is the top at this point. the bottom. So now look at it. There's been no top in recent time except this one. So if I'm going to sell, this would be my the point where the fractal is showing here will be my stop loss. That's what the fractal means. So for a buy, for example, let's see if I can get a buy now. Okay, buy. So for a buy, look at the fractal down. So in a buy trade, you will use fractal down, the fractal that is pointing down as your stop loss. While in a sell trade, you use the fractal that is pointing up as your stop loss. Again, in a buy trade like this, you place a buy, you use this fractal, the fractal that is pointing down, that's the peak of it like this. This is your stop loss. That's how they use it. So, okay, like this now. If I want to sell, this is my stop loss. Okay, I'll just put my stop loss here. When the last fractal is a fractal up, so it shows that was a peak, that was a top, and for a sell trade, that will be stop loss. That's what they do. Most traders use that, and it seems to work for them. Okay, so that's it for like for this is a buy trade. What would be the best stop loss? It will be this fractal down. So when you are buying, you use fractal that is pointing down as a stop loss. Then the nearest fractal that is pointing down as your stop loss. When you are selling, you use the nearest fractal that is pointing up. Let's say I'm selling now. Let's look for a sell. Oh, good, this is a sell. If I'm selling, the nearest fractal that is pointing up is this, and so I'll just gladly put my stop loss here, and that'll be how to use fractal. The finally is high and low of previous candles. All right, so some traders just use the peak, the high of the last candle as their stop loss. Like in this sell now, if I place a sell here, I would use the peak, the high of last candle here as my stop loss. Is that okay? Sometimes it works. I've seen that in many situations. I like this now. I'm selling. If I enter a sell right away, my stop loss using the high and low of the previous candle will be here. Remember, you have to use the previous candle. Okay, the high. If it's a sell, use the high of the previous candle. And then for a buy, let's look for some uptrend. Okay, now look at this now. This is a buy trade, Euro USD daily chart. So the previous candle's low is our stop loss, and that's it here. The low of the previous candle is a stop loss in a buy trade, while the high of the previous candle is our stop loss in a sell trade. Okay, so someone is asking me to show again the indicator. I guess you're talking about the fractal or the RSI. Sorry, the parabolic SAR. Okay, don't worry, I'll get back to that. I need to ensure that I'm on pace. When I get to the question and answer, I'm going to go over any question, and you can also be popping your questions once in a while. Okay, let me just go through that again. The parabolic SAR now. This parabolic SAR, you go to indicator list, go down to trend, and then you click parabolic SAR. Okay, and I said parabolic SAR either is the dot will be showing below, or it will be showing above. When it's showing below, it symbolizes an upward movement of price. It means that price is going up when it's showing below. When it's showing above, it means that price is going down. So when I want to buy now in an uptrend, when I want to buy, I'll use the dot that is below, the dot that is directly beneath the candle that where I place my trade from. And if I'm placing a sell, then I'll use the dot directly above, like say a sell. Now I'll use the dot directly above that candle where my sell trade was taken. And if it's all that's for parabolic SAR. And then for fractal, B. Williams fractal, it does the same thing like the dots, but does that every candle doesn't have a fractal on it, unlike parabolic SAR. Every candle has a dot on top of it or below it. But fractal shows using some certain conditions. There's no need to go into that today because it's a different thing entirely. But you would use the nearest fractal up. There's fractal up, that's the fractal pointing up. You see it like this, or this fractal down, the fractal pointing down. So the fractal up is what you use as a stop loss when you are selling. So if I want to sell now, I'll put my stop loss here. Is that okay, guys? And then the fractal down, for example, let's say I have a sell, and can I get a sell? I mean a buy, sorry. This is a buy. So the fractal down is going to be my stop loss. Step and maximum mean under parabolic SAR. We are not actually deciding what parameter we'll be using for parabolic SAR. You can use a default setting. All right, you can use a default setting and it works so well. Okay. All right. So we have talked about different types of technical based stop loss. So somebody asked, where is the best place to put stop loss? I've mentioned some of them, the technical ones that traders use. The next thing is there is another type of stop loss setting, and that's using quantitative method, quantitative stop loss. The quantitative stop loss is a little how do I put it? If you have followed my riding the trend, if you have been following me for a while, there's a webinar I did on riding the trend strategy season 3, where I talked about maximum adverse excursion, all right, and how we use it to find the best stop loss. Okay, I'm going to show you. I have an Excel. You can watch the video again. It's online. Riding the trend season 3. Write it down and make a note of it and watch it. You understand. There's even a link for the Excel sheet that you'll use for your back test. Okay, but just for the purpose of this class, I brought the back test Excel sheet. This is actually from a student. You know, I told you that some of my students they do after the season 3 webinar, riding the trend season 3, they embarked on. I was very happy that they embarked on back testing, and some of them have sent their result to me. This was one of my students' results, and he back tested Euro USD for 5 years, and it was wonderful. Okay, so if you're interested in that strategy, just go and watch it. That's not what I want to talk about today. I just want to talk about something very instructive. Now, if you look at this Excel sheet, it's a back test result. It has the date of each trade and what I call MAE, maximum adverse excursion. This is the maximum point in adverse direction before trend changed. When I enter a trade and I'm expecting it to go to a positive direction, and first of all it dances to the negative direction, and afterwards now move to the positive direction and go to my desired exit point, or when the trend changed. That negative direction that it went to first, we want to capture it. That's what they call maximum adverse excursion. Let's say I place a buy now, and then it was supposed to just go up so I can make profit, but it didn't go up. It came down first, dancing down, and I'm losing. I've lost some up to like about 20 pips, and all of a sudden it just veers up again. So that loss that he had first before going up is the maximum adverse excursion. Is that okay? So you go and watch that season 3, riding the trend season 3, and you understand perfectly what I mean by maximum adverse excursion. All right. So we write it down in our back test result and look at it. It means that this trade, for example, Let me increase the. Can you see my Excel sheet? I want to be sure everybody can see my Excel sheet. Please, can you see my Excel sheet? Just type yes if you can see the Excel sheet. I just want a yes and I can move on. All right, awesome. Thank you. Now, look at, yeah, thanks, guys. So now look at this first trade. On the 10th of January, there was a trade. And although there was the profit made, the point made was 3,000 points, 3,044 points. That's about 304 pips. Was a buy trade. But before it got to that 3,000 points, 3,000 profit, 3,000 points profit, the trade danced around to the negative side for like 167 negative points. And so the trader wrote it down that when I entered this trade, when I assumed that I entered this trade here, it didn't just go all the way boom up, it went down a little by 167 points and then went up again. So it captured all that, and then that's what we call maximum negative excursion. So at the end of the back test, we will find out what was the highest loss the market used to, our trade used to dance around to before it eventually goes in the desired profit. We want to know so that we can prepare our mind to know, okay, you know what, when you place a trade, maximum, it can go in the negative like about almost like 500 points against you, eventually it goes up in most cases. So um so so we now find the highest of the maximum adverse excursion, and the highest of it is this one. So if you watch that video, Writing the Trend Season 3, you will see a link on how you will see where to download. I'll give you a link on where to download this Excel sheet actually. Yeah, I think so. And watch that video, do your own back test. The Excel sheet will summarize everything for you. If you are confused, just send me your Excel sheet when you are done. I will help you check whether it captured all the trades. So here, maximum point made in a trade was 10,000 points. Maximum point lost in a trade was 1100. How we got that maximum point loss in the trade was from our MAE, maximum adverse excursion. We wanted to know the maximum loss we had in every trade. All right, and that was 1100, 1,100 points. So it means that on average, I can put my stop loss at 1,000 points for like this student that did this research now. He knows the maximum, so it doesn't mean that the stop loss will be always at the maximum. You know, there's still something we did on the next sheet. All right, but I don't want to go into that. That's not the point of this discussion. Point of discussion is that how do quantitative traders use maximum adverse excursion to define their stop loss. So when I get a 5-year research that shows me that the maximum loss ever had was 1,100 before trend changed, that means I already have my stop loss. That's quantitative based. It has no logical reason. It has no technical analysis, no indicator based, nothing. It's just maths. It's just pure maths, trying to find an occurrence, in the worst case scenario. So that's it, and that's why I said the recommended stop loss I gave you in the riding the trend strategy is purely quantitative. For those of you who have watched the riding the trend strategy that I taught you, the video is online too. Someone asked me how to do back test. Awesome. Amira, please kindly write it down, Riding the Trend Season 3 find it out on our website. It's a webinar I did several days back or weeks back. And you find out how to do a back test. That Excel sheet I just showed, you will get a link on how to download that Excel sheet, and you can try your hands on it. Then send me whatever you've done in your through email. I'll give you my email address at the end of this webinar, and when you send it to me, I can help you further. I can get back to you and tell you, okay, you made a good attempt, and this is how you should do it. All right, I've done that for a lot of my students. Like that Excel sheet I showed you was just produced by my student. And someone asked me, Gopinath asked me, how is this data captured, please? The data is same answer I gave Amira. The data is captured from your back test by shifting your chart back and assuming the strategy you are using had worked in those historical data, into historical time. So please watch Writing a Trend season 3. You can watch season 1, 2, 3 to be updated with what we're doing as well. All right, guys, let's fire on. So I said that in that Writing a Trend strategy, this season 1, I recommended stop loss for you. I said if you are using H1, you should use I think 25 pips or something, or 50 pips. And if you are using H4, you should use 50 pips or 100 pips, I guess. So it is purely from the back test that I did. So it's quantitative. Some students have asked me in my classes, why did you choose 50 pips stop loss on H1 chart? And I said there's no reason. It was just from a back test. We found out the maximum loss ever occurred on an H1 chart. We discovered that about 50 pips is just sufficient, and that's how we have stop loss as 50 pips. Okay, let's go on. Another way, quantitative method traders use to find stop loss. Yeah, 25 pips for H1. Yeah, guys, if you're listening to me and you have watched Writing a Trend season 1, I said 25 pips minimum on H1 for stop loss. Okay, now I'm making it 50 pips because I did some more research. All right, so you're fine if you use 25 pips. The difference will not be so much. H1 25 pips, you will be fine. H1 50 pips, you will be fine as well. Is that okay? That's why I said minimum 25 pips. Minimum. The minimum stop loss you must use, if it's higher than 25 pips, fine. But the minimum you must use is 25 pips. Okay, guys. So whether you use 25 pips or 50 pips on H1, you would be fine still. Let's go on. All right. Another method, quantitative method of choosing your stop loss is average candle size, average candle range. So what do I mean? What do I mean by average candle range? What traders do is that they measure the range. That's the from high to low of every candle. I know it's difficult to do, but they look for an average candle size. And let's say now, like an uptrend like this, if you can see my chart. Okay, I'll get to that. Emmanuel says the Writing a Trend Strategy edition 2019 is not yet on the website. It's actually on the website. I'll show you where to get it. Okay, so look at the uptrend. Look at these movements now. If I wanted to find the average length of each candle, it's going to be serious work. So what I will just do is to find the highest candle, the candle with the largest body size, and this is largest high to low size, not body size. Now that means a different thing. So like this candle, the high to the low seems to be the highest aside the current one that is forming. So this I'll measure from high to low of this large candle, and that's giving me 161 1612 points. So that means that my maximum stop loss to use when I'm trading is 1612 points. That's the maximum, because that so far that has been the largest size of any candle in recent time. So that's one way to choose stop loss. So after this webinar, you're not going to ask me where is the best stop loss or how do I choose a stop loss. I've given you all method, a lot of the methods traders all over the world use in finding an ideal stop loss. Is that okay? I'm sure you like it. So let's finish up on that series, on that topic. The final one is pivot point. Pivot point. Hold on. Pivot point values. I'm not sure a lot of you have heard about pivot points. Okay, but we have on our website. Let me see if I can pop on our website immediately. We have on our website where you can download a pivot point calculator. All right, so please find out how to use that calculator. It's very simple, and you even have a signal on pivot point. Yeah, so go to, I think, education, and then you go to, okay, you have to log in first. Let's see if I can log in quickly. Hold on a second. So you have to log in on our website, and then you can have access to download the pivot point indicator. Download it on your MT4, and you can use it as you like. Sorry about that. Ouch, this is serious. Okay, let's go on. Don't worry, I don't want this to slow us down. All right, so when you log in, you'll find where we have our trading tools. You see pivot point calculator. Just download it, and maybe I'll do a material later on the manual on how to use pivot point. That will be another webinar. Okay, so that's how to choose your stop losses. Okay, so let's go over that again quickly. We have oh, sorry, gone too far back. Types of stop loss. We have tops and bottoms on the chart. That means resistance and support. Where the price has gone to a peak and a low. Then we have parabolic SAR. Parabolic SAR is a dot indicator. When the dot is showing under, it means the trend is going up. So you will use the dots that is showing under as your stop loss. Then fractal is a like a cone like pyramid object, points up, points down. So when it points up, you use that up. If you are selling, use that up as a stop loss. And when it points down, that's the bottom. So when you're buying, use that bottom as a stop loss. High and low of previous candle, the high and the low of the previous candle. If you are buying, use the low of the previous candle. If you are selling, use the high of the previous candle. That's technical based. Then we have the quantitative based stop losses using the maximum adverse excursion. Find the maximum loss ever occurred that has ever occurred in the history or in your during your back test, and that will be an ideal stop loss for you. Then average range of a candle. So you find the maximum high to low of a candle in recent time. Just look for the recent times and see, okay, in this uptrend or in this downtrend, this is to be the biggest candle here. The range of that candle should be your stop loss and a pivot point. Then someone asked me, pivot points are similar to Fibonacci levels. Yeah, they're similar. It's calculation. Fibonacci level is also can be used as stop loss. All right. So reward risk ratio. Now let's go into something interesting. This is the ratio of your take profit to your stop loss. So for example, now you are trading, you set your take profit to 200 points, your stop loss to 100 points. It simply means you are using a reward to risk of 2 to 1. That means 200 points to 100 points. So that means 2 to 1. Okay, so 2 portions, you are making 2 portions, you are trying to win 2 portions for 1 portion risk. That's what it means. You are risking 1 portion to make 2 portions. So reward risk is 2 to 1. Hope that is clear. That's what I mean by reward risk ratio. Okay, the amount of points you want to make compared to the amount of points you want to lose as your stop loss. That is the reward to risk ratio. So some traders can use 2 to 1, some can use 3 to 1. That means they are winning 3, they want to win 3 times of their stop loss. Some traders can use 1 to 1. They want to win the same number of points as that of the stop loss. That's what we mean by a reward risk ratio. It could also be in percentage of your balance. Yes. So for those of you like me who love to use percentage risk. So if I'm risking 10% as my 10% of my balance as my stop loss, then maybe I will use 20% of my balance as my take profit. Okay, so that's another way to choose that's another way to calculate reward risk ratio. So in this case, I'm trying to make 20% by risking 10%. So that's 2 to 1. So I'm trying to make 2 times of my risk. That's 2 to 1. Is that okay? Okay, so let's go on. Success rate now. What is success rate? This is also known as winning rate. The percentage of trades that go in profit, that go to your take profit, the percentage of trade that go to your take profit. That's what we mean by success rate. Okay. And if you do not use a take profit, then you could use average profits made. That means if you don't usually set take profit, maybe if you are using riding a trend strategy, there's no take profit. So, but on average, there's an amount of pips or point that is made. So that's going to be your you use that to calculate your success rate. So I'll show you how it's done, and I'll also give you an Excel to help you. So how do we find that success rate of our strategy? It's very simple. Now, this is what I advise you to do, guys. When you are trading, try and journal, try and write every trade you take, write it down in a sheet of paper. At the end of the trade, write down the amount you made. If that trade went in profit, if that trade went in loss, try and have something documented. Is that okay? I would advise you to do that. I do that often, and now I don't have to do it manually. I have analytical tools that help me to do all that very easily now. But I advise you to always do that. So let's say I'm recording my trades now, and I've placed 10 trades so far. Total trade equals to 10. And out of the 10, have won 5. I've made 5 out of the 10. It simply means that for me to find my success rate, that's the percentage of winning ratio, winning rate, I would say 5, which is my winning trade, divided by 10, which is my total trade. Winning trades divided by total trades. And I can multiply it by 100% because I want to put it in percentage. And that's going to be 50%. It means that I won 50% times of my total trades. I hope it's clear, guys. Don't worry, I did an Excel sheet for you. Let me show you quickly. I'm going to give you that after the class. I'll show you how after the webinar, so you get how to download it. Now let me show you how it works. Yeah. So this is it. So when you can you see this Excel? I want to know if you can see this Excel. I have an Excel in front of me that has yeah, okay, good. So now look at this Excel. The only place you will input information is winning trades. You type so far. Let's say you do this every month, you'll be able to have a lot of information. Every month end, Just come and do this exercise. Go and count how many trades you place that hit their take profit. That won. That's what we mean winning trade. That's what we mean by winning trade. If there are 9, you write 9 here. If there are 10, you type 10 here. Type it. Okay. Then what was the total trade you placed for that month? If there are 15 trades, you type 15 here. Okay, that's it. Just those 2 information that you need from this Excel sheet. That's all. And then it will calculate for you your success rate, 67% success rate. That means you have 67% winning rate. You have a fantastic strategy that wins 67% of the time, 10 out of 15 trades. All right. So we'll come back to this Excel sheet. There are more information there. I'll teach you how to navigate that. Let's just go finish up our information here. So that's winning, that's success rate. Okay. So now here I'm saying bad to good strategy. Now what I mean by bad to good strategy is that, we have this notion that traders think if you can teach me a strategy that makes that wins 9 trades out of 10, I might be very successful. Let's find out if that's true. If you can teach me a strategy that wins 8 times out of 10, I'm sure going to be successful. But we've found traders who have strategies that have a winning rate of 80% and they still lost their accounts. I've seen that every time. The guy will have a strategy that has 80% win rate. That means 8 out of 10 trades he places will be a winner. He will get to take profit. But at the end of the day, the whole account is wiped out. So let's review what could be causing this or why this. Your strategy doesn't have to be 100% success rate to be profitable. Yeah, that's true. That's true, guys. Your strategy doesn't have to be 100% success, so doesn't have to have a 100% success rate to be profitable. Profitability is about how much money you make when you win minus how much money you lost when you lose. That's what profitability is about. When you hit take profit, how much dollar did you win? Did you make? How much naira? How much rand? How much shillings? How much cedis did you make? That's what it means. So it's not about I placed 10 trades and I won 8. That's one part of the story, but that's not the reason why you are a profitable trader. Is that okay, guys? You'll find out why I'm advising you. I'm giving you such advice. Why I'm emphasizing on this thing I'm saying. It is hard to find a strategy with a 100% success rate. Guys, this is very true. Stop looking out for strategies that have 100% success rate. They don't exist. They don't exist simply because the market is dynamic. So your strategy that works when the market is trendy might not work when it's choppy. The strategy that worked when the market is retracing might not work when the market is trending. So the market doesn't have a fixed cycle every time. It changes. So you can never get one strategy that has 100% winning rate. If you keep looking for that, good luck to you. You'll find it several years after. So please don't waste your time. You don't need a strategy with 100% success rate. Is that okay? All right, let's go on. You can turn a losing strategy into a profitable strategy. Yeah, that's true. You can turn a strategy that has been losing money. Yeah, this has happened to a lot of my students, and that's interesting to note. I had one of my students who had a very good strategy, but it was losing money. The strategy, if the guy placed 10 trades, 6 will win. 4 will lose. But you know what? At the end of the month, the guy would lose his whole account, because the 4 that lost would eventually destroy the whole account, destroy the profit made by the 6 trades that went in profit, and eventually destroy the whole account. So when he met me, I said you could change this, you could make this same strategy profitable for you, and that's what I'm about to tell you now. Right? So listen as we do that. So we can only do that by changing the reward risk ratio. Okay, let me explain further. Let me show you some slides to help you. Now look at this. Look at this. Take a look at this. Let me give you some seconds. Just take a look at this. This is a good winning rate, but it's an unprofitable trader. It's a good winning rate, but it's an unprofitable trader. It has a good winning rate. Why? Because it placed first trade, he made $1,000. Second trade, he made $1,000, and so on till 9th trade. He was making $1,000 every time he placed his trade. And on the 10th trade, he lost $10,000. So you see, at the end of the month, if this was 1 month analysis, at the end of the month, the guy had lost a sum of $1,000. So he was not profitable that month. And this could be his story month after month. But he has a good winning rate. So it's not about the winning rate. You see that, guys? That's the point. Now look at this guy. Winning trades were 9. Total trades were 10. Out of 10 trades, he won 9. Success rate was 90%. So he has a strategy that wins 90%. Somebody say, teach me a strategy that wins 90%. And this is one. I give you this one. He wins 9 times. The 10th one destroys the whole account. But it's a strategy that wins 90%. Yeah. So that's it. So you really need to understand these things. And when you do, you don't stop. You don't go on searching for a strategy with high success rate any longer. You stay with a strategy that you have and tweak it to work for you. Is that okay? That's what I learned that changed the whole of the chase of Holy Grail. I stopped that chase. I was chasing around for Holy Grail, a strategy that never loses, a strategy that has high success rate. In fact, I didn't even find number 1 and number 2. I kept losing until I learned that is not essentially what makes traders successful. It's all about how much they win when they win and how much they lose when they lose. So you see the strategy. Now look at the problem of the strategy. The problem of the strategy is that this reward risk ratio is 1:10. The guy tries to win 1 part and risk 10 parts. That's what he does, and that's why when he caught up with him at the last trade, he lost 10 times of every. So every time the guy is trying to trade, he tries to make $1,000 and he tries to lose or risk $10,000. That's what he does every time, and that's why he has such a winning rate. So he targets to make 1 part and lose 10 parts of what he's targeting to make. That's a reward risk ratio of 1:10. Let's look at another trader that doesn't have such a winning rate. Now look at this poor winning rate. He has 4 trades that went in profit and 6 trades that went in the loss. So wow, what kind of strategy is that? How can you win 4 times and you lose the whole of 6 times? But you know what? At the end of the month, the guy had money. Yes or no? Yes. Look at it. He had $3,400. He doesn't have a strategy that wins all the time. Only 4 times out of 10. And the guy had some money at the end of the month. But the other guy, 9 times he wins out of 10 trades. But he was in the loss. So look at what happened here. What's the difference between these two guys? This guy wins 1,000 the first day, 1,000 second, 1,000 third, 1,000 fourth, 4,000. When he's losing just $100. So 100 last time 600. So 4,000 minus 600, 3,400. You see that, guys? So it's a winning trade of 4 out of 10, 40% success rate. But look at what changed this guy. His reward to risk ratio was changed. He tried to make 10 times of what he was risking. That's what he did. He tries to make 10 times of what he was risking. All right. So that's what changed this guy's story. So it's not essentially about the winning rates. That's why some of the strategies out there, you see large stop loss, very large stop loss, like 500 pips stop loss, and then the guy will set 20 pips take profit. Small take profit, large stop loss. And you know what? He'll be hitting the take profit every time. Pa, 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 pa. 9 times out of 10. But the day he will hit one stop loss, boom, the whole account's gone. All profit made gone. Why? Because he had 500 pips stop loss, or sometimes no stop loss at all. And then 10 pips take profit. Pew, market hits. Pew, market hits it. Pew, pew, pew. And then 9 times out of 10 trades, or 50 trades out of 100 trades. It might not be 10 trades every time, but I'm just using that as an example. So it's a bad strategy. It's a bad strategy. Okay, so it's purely about how much is your reward to risk and what is your success rate. Is that okay? So we'll use those two information, our success rate and our reward to risk, to find a balance and make us profitable. That's what we're going to do now. So in the Excel I gave you, let me show you in the Excel sheet. Look at it. Now let me explain the Excel sheet. So if you can see the Excel sheet, please let me know. In the Excel sheet, I'll give you where to download it. So see what you're going to do. Don't just be watching webinars. Don't just be watching webinars. Well, I'm not interested in 1 million people watching the webinar. If it's just 10 of you watching it and you're doing what I asked you to do, you will see a result in your trading history in the next couple of months. Is that okay? So this is what I want you to do. Take this Excel sheet. I'm going to give you a link to download it. Go to back to your trades. Please keep trading for like another 2 weeks or 1 week. Okay, 1 week. You can do this weekly if you like. You can do this monthly if you like. After that 1 week, record how many trades were winning trades. Calculate them. How many of the trades got to take profit? That means you have to allow your trade to get to take profit if you have to take profit. If you don't have to take profit, there's no problem. Or you just need to count how many of the trades you close in profit. It's the same thing. We'll get an idea of what we're trying to do. So how many trades get to profit? Count them out of the week. 1, 2, 3, 4. Go to your MT4 and count it, or in your journal. You should be writing your journal. Then count it. Write it down. I have 10 trades, or I have 11 trades, or I have 15 trades get into profit. Then total trades, count all the trades all together, not the profitable one, both the profitable and the losing one. Count all of them. All the trades that were executed, not pending orders. Pending orders are not trade. All trades that were executed, that is winning trades and losing trade together. Count them together. Okay, so let's say you counted them together and it gave you 30 for that week, or for the 2 weeks. The Excel sheet will calculate your success rate for you. It means you have a success rate of 50%. Your winning rate, you win 50% of the time. So you will go to the next to this place of the Excel, this column of the Excel. You will look at the different success rate. If you have 5% success rate, your reward risk ratio must be more, not equals to. That's why I say greater. I put greater than sign here. If your success rate is 5% success rate, your reward risk ratio must be more than 19. That means if your stop loss was 100 points, your take profit must be 19 times 100. That is 1,900 points. That's the meaning of. You don't have to calculate this one. It's already done in the Excel sheet. The only thing you need to put is winning trade and total trade, then to give you your success rate. Then you come across here and come and look for your success rate and see the recommended reward risk ratio. So for this 50% success rate, it means that if I'm the guy, it means that I have to be using something above 1 reward risk ratio. That means if my stop loss is 100, I have to use more than 100 as my take profit. If my stop loss was 100 points, I have to use more than 100 points as my I have to use something like 120, 150, even 200. This is the minimum you must use for each of the stop loss, for each of the success rates. I hope this Excel sheet is clear. Just put your winning rate, do this exercise per week or per month. Guys, you can't be a lazy trader. Trading is not it's not a cheap business. Every business has got its own detail of work. This is your own work. You have to do it. You have to take it like a business. So every week, every month, sit down. How many trades were in profit? I mean, how would I trade better the next month? This is what's going to help you. This is what's going to help you. So you calculate total winning trades you had for the month, total profits, total trades, total altogether trades. It will calculate the success rate. If you get success rate, let's change it now. Let's say my winning trades for the month was 22 trades. The total trade I placed for the month were 30 trades. It means I have a winning rate of 73%, success rate of 73%. I will now come across here and look at 70, in between 70 and 75. So let's say I use 75. It means that I must use something higher than 0.33 reward to risk ratio. That means if my risk is 100, my reward must be more than 33. If my risk is 100 pips, 100 points, my reward could be something like 50 points, even 100 points. It must be more than, this is the minimum. So you multiply whatever your risk is by 0.3. That's how I got at 3. Do you get it? Yes. Your stop loss might not be 100 pips. It might not be 100 points. Your stop loss might be 20 points or 2,000 points. Okay? Multiply it by 19. This is why this factor is here. And that's how we got this. Is that okay? Multiply, for example, if I have 70% success rate, it means that I have to use a minimum of 0.43 to multiply my stop loss. That's it. So if my stop loss was 100, multiplied by 0.43, I get 43 points. Is that okay, guys? So I'm going to leave you this Excel sheet. So this is a link. You will get this Excel sheet if you go to the tinyurl.com, tinyurl.com /FXTM 11223344. All right. So that's it. So let me take questions and then I'll wrap up the webinar. So if you have questions, you can ask me. This is about lot size, and I try to make it as simple as straightforward. How to choose your lot size. And okay, someone says I came in a bit late. Can I have the recorded version? If yes, yeah. The problem with recorded version is that it doesn't come out immediately. We have to go through editing and all that. So if you have if you attended the webinar, you have an advantage. You can get to work immediately, not waiting for like 1 week or so before you get recorded version. So that's why I advise you to always attend the webinar. So get the link. I'm showing you a link right now. tinyurl.com /FXTM 11223344. Copy that link, download the Excel sheet, and get to work. Get to work immediately. All right. And while those who didn't attend the webinar would have to wait for the webinar to be published on our website, I don't know when that will be. Maybe next week. I'll try and hasten it up this time around. Someone said, "Can I have your email address?" Of course. Let me give you my email address. Conrad Okongu, my name and my surname. Conrad.Okongu. Yes, Conrad.Okongu. My name and my surname. Conrad.Okongu @forextime.com. Conrad.Okongu @forextime.com. So if you send me your Excel sheet, I'm giving you my commitment. I will review it and get back to you. If you don't do that work, then no problem. But I'm ready to help any trader who wants to be helped. I've done that to a lot of my students. That Excel sheet I showed you was one of my students. Okay, so any further question? Yeah, I think I've answered a lot of them. So I think it's pretty straightforward. So no more question, guys. Conrad Okongu. Okay, let me type my name on this. Let me put it here so you see. Conrad dot OKONGWU at forextime.com. Yeah, that's it. Conrad Conrad.okongw at forextime.com. That's my email address. And please, is it possible to have your number? I'm not sure. Collins. Collins, just send me an email first, all right? Send me an email. Send me an email. I'll get to you. Whatever question it is. If my number is needed, I'll put it there. Be sure. All right. But this is a public space, and so any other question, guys? No question? You clear? Please show me how to get the riding the trend strategy webinar. Oh, awesome. That's true. I almost forgot that. You go to the website. I was trying to log into this website. How do I do this? A second. Let me try one more. This is not. This is not. Okay. Usually you log in. When you log in here, then because I don't know why my login is not going through. Okay, let me try one more time, guys. Just hold on. Uh, big problem. So log in. When you log in at the left-hand panel, you see a left-hand panel. Okay, you see educational resources. All right. At the left, once you log in, there's a panel that will show on your left hand. Just look for educational resources. You'll see webinar under it. All right, that's how it works. It's not going through because you're in Congo is in small letter instead of capital. Oh, I don't know about that, guys. Don't worry. Just log in on the left hand panel. You'll find it. Another way you can find it on our website is to go through this place education. Then you go down to education webinar, forex trading webinar. Can you see forex trading webinar? Then you go down, you see the current webinar, and you see the past webinar after that. Yeah, these are past webinar. It's asking me to register, but you see, if you look at it, you see riding the trend, risk management 101. That's it. That's the last one. And then scroll down again, you will be able to see riding the trend strategy. They're all there. But usually just log in, and if you still can't find it, please send us a go on our website. You see all this. We have a live chat column there. Just chat up with them. Quickly direct me on how to download, how to view your past webinar, and an online attendant there will respond to you. So that's not a problem. Please throw more light with pivot point values. Pivot point values. First of all, download the indicator. Yeah, we have a free indicator. Download it. Then it divides the chart into um, 6 regions: 3, 1, 2, 3 up, 1, 2, 3 down, and the 3 up is resistance, 3 down is support. So simply, what it means is that when the market opens, it could go and hit all the resistances above if the trend is strong, or it could go down and hit the support below. All right. And the different applications to that. Some people use it as take profit target and surplus target, you know. But I'll try and do a video someday. I'll try and do a webinar on how I use pivot points. How I use it. There's a way I use it that works for me. I'll try and do a video, comprehensive 1-hour webinar like this on it. So just watch out for the webinars we do. What is the difference between lot size and stop loss? Wow, Steven, lot size is, when you're placing a trade. Let me see, this is our chart. You click new order. Your lot size is the volume. is the volume. So that's the quantity you want to trade. That is the for currency, it represents 100,000. One lot represents 100,000 units. So it's like volume. What quantity of this asset are you trading? That's lot size. All right, and it's written in decimal: 0.01, 0.02, 0.03, and so on and so forth. Why stop loss? Stop loss is just a price level. Enter buy here, the price where you want to stop loss, where you want to stop your loss, where you don't want the market to go beyond for much loss. That's where you call stop loss. So the one is volume, one is a price level where you exit your trade in a loss. Okay, any other question? All right, I think there's no. Okay, so no more question. Thank you guys. Have a wonderful trading week, and I'll see you next time. God bless you all. Take care, guys.